Welcome back to Markets Today. I'm your host, Mbithe Mwema. It's a very quiet day on the NSE, but we have something exciting to unpack today. MansaX, that's an interesting fund that gives you access to assets within Kenya and outside of Kenya, as well as assets that cut through different asset classes. To unpack the third quarter 2020 performance, we are joined in studio by Mr. Nahashan Mungai, who is an executive director at Standard Investment Bank. Welcome to the show, Nahashan.
Thank you.
What's going on with investments at this point in time?
Well, I mean, it's definitely more exciting, and this year has been an exciting one. And as I've always alluded to, I think 2020 continues to bless us with more opportunities to invest and to find new avenues to make money.
Okay.
The volatilities are up. We expect that this is going to continue into the fourth quarter of the year, so it's an exciting time.
Okay, interesting, because the last time we came, there was not too much volatility, but then the time before that, we
Yes.
just got into the onset of COVID-19.
That's right.
Okay, so where's the volatility? What asset classes are mostly volatile at this point?
So right now, mostly currencies. I mean, there's a lot of concerns around the yield, especially on the dollar itself. The Fed continues to be the main focus point for market participants. Everybody wants to see how much the Fed can continue to stimulate the economy. We have the stimulus debate on Congress right now, where the Republicans want to inject over about $1.8 trillion, but the Democrats want more at $2.2 trillion. And even if they meet halfway, that's a significant amount, considering the Fed has already injected $7 trillion this year alone.
Okay.
So it's very exciting times. So we think that the thing to watch will be how this impacts on the dollar, and therefore how all the other assets then behave against the dollar, specifically commodities like gold, currencies like the euro and the pound.
Okay, so currencies at this point in time, and also U.S. stocks, in as much as they're going
Yes.
into an election cycle.
Correct, yes.
Okay.
Yes.
Is there that kind of volatility in Kenya? We have BBI as a report.
I don't know.
Actually, no, it's not too much. It's been a very quiet period.
Yeah,
Okay,
okay.
fantastic. So I guess now we can get into MansaX, and our graphics can help us put up the performance of this particular MansaX as a product.
Yes.
So MansaX is about 21 months in terms of being in the market and actively being rolled out into the market.
Yes.
How has it performed so far? What was the performance for the third quarter?
All right, so we were fortunate to catch up in Q3.
Yes.
I remember I think at the beginning of Q3, I think I was here, and I
Yes.
mentioned that we had a less than interesting second quarter for obvious reasons, especially the COVID-19 pandemic. So in the Q3 quarter was very critical for us because it was important for us to catch up so that we can be able to align our returns with what we returned last year.
And that was 29. I think we already have it up there. That's 29.38%.
Yes, 29.38%.
Okay.
That's what we did.
Okay, that's some
Yeah.
good performance. But what was
Thank
the
you.
key driver for the recovery?
I think Q3 for us as a fund, just like most funds globally, it was a time to capitalize on some very unique movements. If you look at the tech-heavy Nasdaq, for example, in September alone, it moved over 20%. And we capitalized on such movements. If you look at how the dollar weakened against certain currencies, the euro, for example, gained around 4% against the dollar. Now, if you're trading this in a leveraged portfolio, that's a significant movement.
Wow.
If you look at the cable, which is a pound against the dollar, rallied around 3% the same period. So, and then there's gold. Q3 was we saw the highest levels gold has ever printed, almost doing $2,000 an ounce. That was also very exciting. So Q3 had a lot more opportunities than Q2, mostly because market participants had now relaxed and they were ready now to trade a lot more than they did in Q2. So volatility was back, S&P 500 again printing new highs above 3,400, where it still is up to now.
Okay.
And all these opportunities meant that for a fund that's diversified and is investing in all these assets, there are more than enough pickings to make a return.
I hear you talking about opportunities outside of Kenya. Were there
Yeah.
opportunities inside of Kenya that actually
Absolutely.
were able to whet your appetite in any way?
Absolutely. I think Q3 was very exciting on the fixed income space.
Okay.
Interest rates were, and even now, continue to be on a downward path. We expect that this is going to continue. Government borrowing appetite is still high. And this has been very exciting there for a fund like ours, which also still trades fixed income. And that was also give us some good pickings, especially with the longer dated papers that were offered by the government, specifically from the 10 to 25-year papers.
Okay.
Yeah.
So when you say interest rates are coming down, how is it that you're making money? How do you position if somebody is watching and they want to understand how to trade fixed income based on the outlook on interest rates? How does one think about that?
So how you invest in fixed income and how you make money from fixed income is really just predicting where interest rate movements will go. So when you buy a fixed income paper, you can sell it, okay, say you buy it at a yield of X percent, then you'd be looking to offload it to somebody else at a lower interest rate, and that's how you make your money.
Okay.
So typically fixed income traders will make their money if interest rates are falling, the value of their holdings will go up.
Okay, fantastic.
Yeah.
So that's the only opportunity that was available in Kenya. And then you've talked about gold, you've talked about currency.
I'd say also maybe banking stocks. There were some nice moves.
Yes,
there were some nice moves in Q3 where
Yes.
I mean we saw some banking stocks trade within a range of, like, if you look at equity, between 33 to 37, and that range was quite predictable. And if anyone was following markets on the daily, there was some money to be made from that as well.
Yes.
Yeah.
Okay, so we
Yeah.
wait and see now what happens.
Let's wait and see. Yeah.
Okay, and then what about the growth of this particular fund? We've seen the growth going, year
Yeah.
in, year out.
Yes.
I think the last time you were here, we were probably talking about, is it 1.8 billion?
Yeah, I think 1.8. Yeah.
1.8.
Yes.
How is the performance of that in terms of the uptake from the local market?
I think investors are still excited about the fund. We are getting more and more investors into the fund. We've now grown. We are 2.5 billion as of today.
Okay.
And we expect this to increase with time.
Okay.
Yeah.
And are you getting people who are based in Kenya who want to buy, or is it people in the diaspora who are making investments back home?
Interestingly, most of our investors are local Kenyans.
Okay.
And I think a lot of Kenyans have understood the concept of MansaX, and they've understood the concept of investing in a fund that invests in several asset classes. So it's mostly just local Kenyans.
Okay.
We have some diaspora clients, yes, but most investors are local.
And invest in shillings, or is it in hard dollars? Because of
In
your
shillings
exposure?
mostly.
Okay, in shillings.
shillings,
Do you
yes.
give leverage to your clients?
Yes, we do. I mean, there's an aspect of the fund that employs leverage.
Yes.
Not a big portion of it. I'd say we typically, our internal limits don't allow us to leverage, have leveraged assets that exceed 20% of the portfolio.
Okay.
But there is some level of leverage, yes.
Okay.
Yes.
And then talking about the allocation in the portfolio, has this changed? What are you overweight? What are you underweight in the portfolio? If that's information you can share in the public realm.
Well, I'd say right now we are still overweight on some cash equivalent assets. Interest rates continue to be predictable at the moment, so there's no point in being in more volatile assets while there are easy pickings there.
Okay.
But we are also still heavy on commodities, and still we are also very heavy on global single stocks.
Okay.
Yeah.
Commodities, gold, oil.
Gold continues to be our favorite. I think every time I come on this show,
there's always a conversation.
there's always a
about gold.
conversation around gold. I mean, it's lost a bit of value, especially towards the end of Q3, and that was a drastic, sharp reversal. We still think it continues to be worthwhile to hold in anyone's portfolio for a while, not just a fund like ours. So we continue to hold the same weighting that we've held since the inception of the fund.
Okay, so if somebody is holding gold, is it better to hold gold as an asset, or is it better to actually hold hard currency and not do anything with your hard currency, especially for Kenyans who tend to have dual accounts that they're holding hard currency or holding Kenya shillings?
Well, right now, I think, in all honesty, the dollar might outperform gold locally. So if you're a Kenyan and you had an option of holding dollars against shillings that you earn,
Yes.
then it might outperform holding gold.
Okay.
But if you then buy gold again using a dollar denominated instrument, say some sort of total return swap or an ETF that's dollar denominated, then you get the best of both worlds.
Oh, wow.
You get dollar, which is appreciating against the shilling. Shilling has lost over 8%. I think now 9% as of today,
Yes.
this year alone.
Yes.
And gold has gained 25%. So you'd be looking at returns closer to 35% year on year just on that asset alone. So it's a good time for Kenyans also.
So not holding the new gold ETF. Maybe.
The new gold ETF, you can buy the new gold ETF, and there are ways that you can trade the new gold ETF. It's Kenya shilling denominated, and if an investor wants to hold it and create a dollar asset out of it, this is something that we at MansaX can advise them on how to do that.
So we just need, if you want to figure out how to make money, we just need to find you and talk to you, and you can give us a solution. as well as a golden pot of
That
money.
would be, yeah, we'd be happy to. We'd be
Okay,
happy
fantastic.
to.
So
Yes,
happy
we'd be
to have
happy
that
to.
conversation.
Yeah.
Okay, what about other commodities such as oil? What's happening there? Because we've seen a bit of unfortunate events unfold in Nigeria earlier this week,
Yes.
and we've also seen Russia coming to the table and saying that they want to actually manage the supply as well as the price of oil. How is that particular market looking like?
I mean, since the movement, the major movements we saw in April for oil, when oil tanked to under $0 a barrel, which was crazy. Oil has pretty much stagnated right now around $40 a barrel, and the geopolitical risks, as you've just alluded to, are very high right now. I think it's easier to trade metals right now. The direction is still not very clear. Just other than the geopolitical risks, again, there's the issue of, are we going to have a second wave of COVID-19 coming in? So you might have lower supply, which should obviously increase the prices. And then again, the demand might then fall off again in the fourth quarter. So it becomes a very hard call to make. So right now, if you're trading oil, it becomes very difficult to make a long-term play for it. And it'd probably be easier to play it short-term or not at all.
Okay,
Yeah.
so if you're going to look at commodities, you're really looking at precious metals.
I'd look at gold and silver.
Okay, silver.
Yeah.
How is silver doing? What's happening
It tracks
there?
gold.
Okay.
It tracks gold.
Okay.
So but it's more volatile.
All right.
So sometimes, if you're looking to have a weighting of gold of say X, then in silver you probably have a quarter of that size.
All
Yes.
right, fantastic.
Yeah.
So you've gone through gold and the precious metals, the
Yeah.
commodities
Yeah.
market.
Yeah.
Maybe now we can come and touch on currencies. I think earlier in the show you gave us some currencies that were doing well.
Yes.
You've given us your outlook on the dollar and especially what's happening there.
Yes.
Are there some pairs that stand out on a short-term basis between now and the end of the year that possibly people could look out for?
I think for now just focus on two pairs. Just the
Yes.
euro against the dollar and pound against the dollar. I mean, those should be very interesting just to hold towards the end of the year. They're very good predictors of dollar strength.
Okay.
So if you're looking to short the dollar, I remember I think last time I was here I predicted that the dollar might lose value. It has lost value.
Yes, it has.
We expect that this will continue happening into Q4. And if you really want to take advantage of that, of course the two major currencies to trade will be the pound and the euro.
Okay.
And then of course, unless of course you're also trading US Treasury yields, which again I believe will continue to fall.
Yes, they have been falling.
They
I
have
always
been
look at those
falling.
yields. I'm like, it doesn't compare because the 10 years, I think, below
Under
zero-
1%.
Under 1%.
It's ridiculous. Yeah, can
Exactly.
you imagine holding 10-year money for that price?
For that long, and
Yeah,
yet
it's
in
crazy.
Kenya you actually get it 10.4,
10,
11.4,
11, yes.
10, 11%.
Yes.
So that's very interesting. Okay, now let's talk about shares. You said that you are overweight single stock opportunities.
Yes,
So
yes.
this single stock opportunity, is it in the US market?
In
or
the
are there
US
other
market,
markets
the
that-
US market is the most exciting. I mean, especially for tech stocks. And just to anyone who's listening, just to warn them, our biggest concern has been whether the tech stocks have actually overheated.
Yes.
Because if you look at stocks like Tesla, Apple, Amazon, the FANG stocks, let's just start with those: Facebook, Amazon, Apple, Netflix, and Google. We feel that, most of them are higher, above 80% year-on-year growth. That's insane.
Mm-hmm.
And a lot of this is obviously due to what has happened around COVID, a lot of tech uptake, and this is expected to continue. However, we are concerned if there's any slowdown in stimulus in Q4, maybe you might see a lot of what you call rotations. So fund managers starting to switch from growth stocks to value stocks.
Okay.
And tech stocks are growth stocks. And this is especially around how the valuations for tech stocks are done. So they will use, as we were just discussing, like the 10-year yields, for example, to present value, the value of most of these stocks.
Exactly.
And with yields falling, then the valuations for most of these stocks have been so high. The question is, even a very small slight change in that yield
Yes.
can alter the valuation significantly, which might cause that rotation.
Okay.
So whereas, yes, we've had a good run with them, we are cautious in Q4.
All right,
Yeah, we're
cautious in
cautious.
Q4.
Yeah.
But what about the sentiment? Because 2-3 weeks ago, everybody was like, okay, you really have to pay attention to the election cycle.
Yeah.
But now we're in a place where people are saying if Joe Biden comes in, he'll still continue the stimulus package.
Yeah.
If the Republicans still win, they'll still continue the stimulus package. Does that still have any impact in terms of the outlook and the overheating on U.S. equities?
It still will, because if Biden, say, got the presidency, one of the things that will change is there'd probably be a less aggressive U.S. Trade negotiation stance.
Okay.
And if that happens, then it might increase the outlook for global stocks, non-U.S. stocks. again causing some sort of rotation by money managers from US stocks again to stocks held in Europe and so on.
All right.
So again, this might still depress US stocks.
Okay.
So whatever the case, a Trump win is still the best for US stocks.
That's the best thing for you.
Yeah.
If anything changes, what are you doing? Do you short the stocks? Do you...
Obviously.
Okay.
There are certain stocks that will short.
Okay, so
They're
the
obvious.
next 2 weeks are very critical
Very
in terms of
critical.
understanding what's
Very
happening
critical.
in the US market.
Yes.
Okay, now shall we take a quick break? When we come back, we continue with the analysis of the MansaX as a product, as well as understanding what is happening with global equities and global asset classes. If you have any questions that you would like to ask, perhaps how to join Mansa or anything about Mansa, please, our number is 20146. Send us an SMS. Alternatively, you could reach out to us. That's at Metropole TV on Twitter, Instagram, or Facebook, or at Mbithe Mwema on Facebook, Twitter, or Instagram. See you after the break.